I want to break this merger down. I want to understand it thoroughly for the audience. Where do you want to start? How should we unpack this thing?
This is Jay Martin.
You've been coming on my podcast for about 5 years. When we decided to start covering companies, you're one of the first entrepreneurs that came on the show. And we've covered Dolly Varden since that day when it was a $20 million market cap company. And every single time you've come on the show, I've introduced you as the CEO of Dolly Varden Silver. And we're not going to do that today because the name has changed. Due to the recent merger between Dolly Varden Silver and Contango Ore, you're now the president of a new company called Contango Silver and Gold. You've kept your assets in BC, the silver assets with Dolly Varden, but you've picked up 3 new high-grade gold and silver projects in Alaska, one that's in production. And I just got to say, 5 years ago, $20 million market cap company to today at the helm of a near $1 billion market cap company, man, what a ride. I want to break this merger down. I want to understand it thoroughly for the audience. So where do you want to start? How should we unpack this thing?
Yeah, that's a lot. It's been a good journey. This year's been a transformational year, just on the Dolly side.
Yeah, you guys were crazy busy.
Yeah, we came into the year and we had a plan, and the plan was we're going big. Those 2020, 21, 22, 23, 24, those were set up years, right? And this was the year we made a decision, and it all started with a board meeting in January where it was we're going for it. And so in February, we applied to the New York Stock Exchange. We got listed inside of 2 months. And that really propelled us to higher liquidity, higher share price, a more diverse and larger investor base. And we leveraged that into making 3 acquisitions in a 10-day period in May. Mm-hmm. And those are things, again, we didn't just execute those deals in May. We were monitoring, studying, and waiting for years. And we had all the documentation ready, and we just waited to execute when we had the right currency. Mm-hmm. So everything we've done has been very deliberate, and there's things that we haven't done that we want to do, that we're still waiting to do. And so on the back of the NYSE listing, on the back of the acquisitions, we put away $63 million in 2 financings, and both were done at record high prices. The share price, the high we got to in September was $7.49 a share. The average dilution we incurred on the $34 million we raised in October was $7.40, 9 cents off the high. We've put out 4 big news releases in terms of drill results. 1,400 grams of silver over 21 meters and several 300-gram meter gold intercepts, including today's recent press release where we hit another, 14 grams over 21 meters. But you asked me about the merger.
Well, I want to unpack the mechanics. Yeah. And whenever I see a transaction like this occur, I want to understand thoroughly what each party brought to the table, right? Yeah. What does this equation actually mean? What is Dolly brought? What is Contango brought? What is the sum of the parts? Yeah. Right. But it just, as I hear you walk through this merger falls in that bucket. You knew about these acquisitions that you did in May, years in advance. You said we wanted to wait until we had the currency to transact on our terms. That's what you did. And I got to think the merger kind of falls in the same bucket in that you've got the NYSE listing. You've consolidated the triangle, right? You've been putting out amazing drill results. And the last few months, those have been largely gold in addition to your silver. And so now you come to that table with a stronger currency in any merger scenario.
And for me, it always starts with the people. And if you look at who we're merging with and who they're run by, and I think of their board, I think of their senior management, and Rick Van Nieuwenhuis is a name that is synonymous with Alaska and success. And Rick built Nova Gold which today is a $6 billion market cap.
That's the Donlin project.
That's right.
In Alaska. Right.
And in addition to Nova, he was the CEO of Trilogy. The U.S. government has recently come in as a major investor.
$35 million check. Yeah.
And Rick was instrumental in permitting the Ambler Road.
Okay.
So, and he's had a lot of other success, but his most recent venture, as Dolly Varden was becoming a dominant name in the Golden Triangle, Contango Ore was becoming a dominant exploration developer and producer in Alaska. And so, my career over the last 22 years, partnering with people like Frank Justra and other serially successful mining entrepreneurs, you're only as good as the people you surround yourself with. And one of the biggest intangibles in this deal, in terms of deal rationale, is Rick, Mike Clark, and the team at Contango. Because we don't know what challenges we're going to be faced with in the future, but this team has proven, for decades, delivering success and doing often what is seen as impossible, making discoveries, advancing those discoveries, permitting those discoveries. And in the case of Contango, the major rationale behind the merger is for Contango, they have a solid 5-year plan.
Okay.
They've got operations, they've got a great balance sheet, they've got a good pipeline. Why Dolly Varden's makes a lot of sense for them is it takes their solid 5-year plan and it turns it into a 20-year plan. With our large high-grade mineral inventory, they now have a line of sight for 2 decades of development, exploration, production. And so Contango is buying silver. Dolly Varden is buying production. And, for me, there's a lot of different components of the deal rationale. First of all, you've got consistent geographics, right? Geographical consistency in terms of Alaska, Northwest BC.
Yeah.
Okay. You've got high grade. We've got some of the highest grade silver and gold projects that are out there. So do they.
Yeah.
They've got the cash flow and they're partnered with Kinross. Often what you have for a junior is you have operator risk. I don't have an operating team, right? We've got a wonderful exploration team, a capital markets team, but we don't have a team of operators. How do we move Kitsault from exploration through development into production? The operation and construction risk is so high. So there's a number of points here I can go through, but the key is my shareholders want safe jurisdiction, high grade silver and gold. And what we're doing here is by doing this merger, we're getting exposure to the cash flow to develop our project in a non-dilutive way.
Yeah. Okay. Now you said something there that just stuck with me because juniors don't always have the expertise to be operators. And that's a mistake that companies make every market cycle a few times and investors have to watch it. That's a two-way street too. Every once in a while you see an operator move into exploration, and had they been successful as an operator, that's great. I think you still have to reprove yourself on that new playing field, right? That's the competitive advantage that Kinross brought to Contango because it's the Manchu mine that is their producing asset, and that's the partnership with Kinross on that asset, yes?
That's correct.
So is it expected that Kinross partnership has some expansion possibility, or how would that relate?
Yeah, it's interesting. Fort Knox is a hungry site that needs more ore, and one of the opportunities on Manh Choh was to bring that high grade ore and truck it up to Fort Knox. There's another property in the portfolio called Lucky Shot.
Yeah.
That also fits that description. It's about a 15 gram per ton ore body that would be amenable to Fort Knox as well. And so there's a big drill program that's planned and fully funded for 2026. And what I can see in terms of a pipeline is Manh Choh is a 200,000 ounce a year producer.
Okay.
And so Contango's end on that is about 60,000 ounces a year.
Yes.
Right. If you factor in their all-in sustaining costs, that's a $200 million free cash flow operation in Canadian dollar terms. That's what the project will spit out. 30% on the Contango end. If once Lucky Shot is brought into that pipeline, whether that's in 2027 or 2028, and again, this drill program in 26 is going to be crucial to determine that production timeline, but that could take the pro forma production profile from 60,000 ounces to 90 and then on to 110. And then what's exciting is, as I mentioned, that 20-year plan, both Contango's Johnson Tract and Dolly Varden's Kitsault Valley, right, can add in another significant production layer. Johnson Tract bringing that production profile to 200,000 ounces a year, and the Kitsault Valley about 6 million ounces of silver equivalent production.
Right. Okay. So those three assets with Contango, Manh Choh is the producer presently scheduled to do around 60,000 ounces per year.
It's doing 60,000 ounces right now.
It's doing 60,000 right now.
It's actually doing 200,000 ounces right now. The 30%, it's a 70-30 Kinross Contango. So their end is 60,000 ounces.
Yeah. Got it. Okay. And out of the other two assets, you mentioned Johnson Tract and Lucky Shot. Thank you. Is it Lucky Shot that's the near term out of those two assets?
It is. But the one that excites me the most is Johnson Tract.
Okay. All right.
It's a plus million ounce ore body at 10 grams per ton. But I remember when it was in an independent company called High Gold, which ran to about $4 or $5 a share. I remember these 100-meter 14-gram gold intercepts, and it's on tidewater. It's extremely high grade. And what's most exciting about the prospect is it's not been drilled. The down dip extension is not accessible from surface. So as you tunnel into that deposit and get underground, you can test the depth extents of the deposit. So we know there's 1.1 million ounces, but how much more is there? And what we're finding at our project at Wolf is those veins intensify in both width and grade as you go deeper. And it's what drove me to Dolly Varden over 5 years ago. Dolly Varden, when I came in, had only been drilled down to a depth of 300 meters. Where I started in the industry 20 years ago, I was down a mile below surface. Right. So for me, I always say, like, the gold and silver doesn't fall from the sky. Yeah. If you follow the fluid pathways, and you can get into some really powerful systems, and whether it's a hinge, but you can get into some serious grade at tonnage as you go to the source of the mineralization.
Okay. And let me ask you, because Dolly Varden Silver, you put out amazing silver results, and since you took the helm of the company, have continued to increase the ounce count. That was the mission when you took the wheel. You've done that. The last few months, the majority of the results have been showcasing high-grade gold mineralization. Now, is there a trend or a history, specifically in the Golden Triangle, of a silver discovery leading to a gold system, if you look at the mines that are produced in this area before?
Yeah, that's something that I was told a long time ago, that what starts as a silver mine has the potential to become a really big gold system. As you move away from the distal surface high grade silver, you move into the heat source and you can uncover a really big gold system. So Premier, which was the most profitable mine in North America when it was operating, produced 2 million ounces of gold, but it also produced 45 million ounces of silver. So what started as a silver mine, became a very profitable gold mine. SK Creek, which is known for the 3 million ounces at 49 grams per ton gold, also produced 160 million ounces of silver at 2,200 grams per ton. And most recently, Brucejack, which was in silver standard, was known for the silver, and then 13 million ounces of gold were discovered. So one of for me, Dolly was interesting because there was 40 million ounces of high grade silver identified, and there was a history of production. But as we move from the silver dominant South, we're getting into silver gold and now a gold dominant system. But, for any of my shareholders or any investors that are looking for primary silver opportunities, I'm interested in focusing on silver. And so in March, we're putting out a new resource estimate where I suspect our silver could increase by 50%. I suspect our gold, the grades are going to increase by 50%, and we're going to convert inferred to indicated by 50%. But most importantly, that primary high-grade silver, things like the Wolf vein, where we're cutting 1,400 grams of silver over 21 meters, 29,000 gram meter silver interval. Those are not represented in the compliant resource estimate today. So what I'm trying to do here is I'm trying to leverage high-grade gold production into growing silver and gold resources. And what we're really creating is North America's next mid-tier silver and gold producer. And if you look at the market and if you care about safety and you care about jurisdiction, and that's important to you, if stability is important to you, if grade's important to you, if you want to work with people who've built $6 billion companies, companies like Nova Gold, there's only really one other choice in the market outside of Contango Silver and Gold, and that's Hecla. There's only two companies now that are your dominant silver and gold producers in North America.
That's right. And, it's safety, it's grade, it's also strategic value, right? And I think about that a lot these days. And I wonder, I'm curious if you do as well. We've expanded the critical metals list to now 60 metals, up from 35 in 2018, almost a double, right? We've been rapidly increasing this, and the focus and urgency that we're seeing from the establishment in the United States and in Canada to favor the mining sector in a way that I haven't seen in 15 years, right? We talked about the Trilogy Metals deal. That's one of several where the United States government or a department of that government is and has become an activist investor in the mining sector, right? Writing checks and then moving policy to make sure the projects get built, like the Ambler Road and the Trilogy Metals. What do you think about that as a development, Shawn?
Well, there was a week recently where in 1 week, the US government and the Chinese government came out and classified silver as critical. That same week, the Reserve Bank of India came out and talked about a policy change that could be implemented as early as April, where they're going to bring silver into the monetary system. Gold in India, through the Reserve Bank of India, can be used as collateral, just as it can be in the US and in many places in the world, but silver's not. And what's most interesting about this is not that they're bringing silver into the monetary system, because that's happened before. The Russian central bank announced that part of their precious metals strategy is now also including silver for the first time. That was announced in the summer. But what's most interesting about the RBI is where they're pegging the ratio. They're pegging the ratio at 1 kilo of gold to 10 kilos of silver, which implies a 10-to-1 silver to gold ratio, which is almost consistent to where we're mining at 8-to-1. It's close to where we are in the natural setting, which is 16-to-1. But what's really interesting is if you look at silver's outperformance, and when you and I first started doing interviews, the price of silver has quadrupled since when we first started talking about silver. And it wouldn't surprise me if we saw another revaluation. We've seen the silver to gold ratio go from 125 to the time we did our first interview to 75. When we first did our interview, I would need 64,000 ounces of silver to buy a home in Vancouver. Today, I only need 15,000. So silver is, on a relative basis to other asset classes, is really outperforming. And that's why, what's really important for me, Contango Silver and Gold, we're going to give investors exposure to high grade projects And most importantly, like if you look at this balance sheet, we're coming out of the gate with 200 million in cash, with 200 million in cash flow. And we're looking for opportunities that are high grade, where we don't need to build production facilities and permit tailings. We're looking for DSO opportunities where, you take Manh Choh, you take a 7-gram open pit ore body, and you lose a gram in transportation costs, but you still have a 6-gram ore body that's going through Fort Knox.
Okay.
And there's a number of underutilized permitted production facilities that we've got our eyes on. And again, I talked about strategy. Not everything we want to do, we have done, right? And so we're in the process, and with increased liquidity, Combined Co will have $8 million a day of liquidity. It'll have 9 analysts covering. It'll have inclusion in GDXJ, SILJ, Russell 2000, the Vanguard ETF. So with this increased market cap, profile, liquidity, valuation, and currency, how many more opportunities can we take on for our shareholders? And that's, and having that cash flow and having that specific pipeline and development timeline, it's really, it reminds me, I've got someone on my board right now who is the 5th employee at Coeur, James Sabala, who went on as the 5th employee to be the CFO, and then he went on to be the CFO of Hecla. And I remember when I first brought the deal to the board, Jim said, "This reminds me of when we started Coeur." And that's exactly what we're doing. It's leveraging that high grade silver inventory. It's buying gold. It's buying production. And let's continue to go out and add silver and gold to the portfolio. And the differentiator, how we separate ourselves from Pan American and First Majestic, is we want high grade and we want to be in North America.
That's it. That is it. And that's the bucket that you and Hecla sit in under the umbrella of that strategic value. And okay. Yeah.
And what's most exciting for me, and this was something where, Hecla was such a big supporter of Dolly Varden, through Phil Baker's leadership. Phil was there for 23 years. And, a lot of the ideas, a lot of the dreams, a lot of the vision that I have, I've adopted from my mentors. People like Rob McLeod, people like Frank Giustra, people like Phil Baker. And an idea that Phil gave me in August of 2022 was his ambition to take Hecla to the S&P 500. Okay. And they just got onto the S&P 600. But when I was looking at companies, I was looking at Pan American Silver. Well, Pan American Silver is larger. Why aren't they on the S&P 600 or 500? Why is Newmont the only gold company on the S&P 500? Where the company is domiciled. And what's so interesting about how we're combining Contango and Dolly is Contango is Topco, domiciled in the US. So as this company grows, we have the potential to list it on those big US-centric indexes. Everything we're doing here is by design, and it's trying to build that larger co. Like, I walked into the studio with a $600 million market cap. We're now 1.2 because of this merger. I want to come back here a year from now and I want to be at 2 billion. And we're going to get there through share price appreciation, but we're also going to get there through more deals. It's the buy and build strategy. It's work for entrepreneurs like Frank Giustra. It's work for the Agnico Eagles and the Newmonts and the Pan Americans. And it's the same philosophy. We'll explore. And what's exciting about this transaction is my young, creative explorationists that have made Dolly Varden a dominant player in the Golden Triangle are going to come into those Contango projects, Johnson Tract, Lucky Shot, Manh Choh, and look for expansion, extension, and discovery opportunities. And Rick and his sophisticated team of mine builders, developers, and operators are going to come into our project and now take us through development and into production. It's a perfect marriage.
Yeah, and doing so with $200 million in cash flow from the Manh Choh.
Rick has been an ambassador to the industry, to Alaska. He's experienced. And I think that team of, myself and him working together, me sharing the value proposition with investors all over the world, and him executing, I think it's going to be a really strong, powerful duo. And I think the assets are complementary, but the people also are.
That's clutch, man. That's great. I didn't know that the area, the jurisdiction the company is domiciled in decided whether or not you qualified for the S&P 600, S&P 500. I thought if you're listed on an American exchange, then you would qualify. So that was the strategy behind Contango remaining one of the advantages of Contango.
It was complicated. There was tax implications. There was a number of things that drove them being top co.
Sure.
But that was one of them.
That was one of them. All right. 200 million in the bank right
200
now?
million Canadian.
Yeah. Okay, good. And I was curious what's next, because you've now got a sizable treasury and very strong cash flow, and the decision therefore to focus your attention on developing what you have or stay hunting. But it sounds like you're going to do both. That's the intention over the next.
So look, we are fully funded for a very, very robust 2026, which will include big drill programs. One of the largest drill programs going into the Kitsault Valley. We had a very successful 2025. We're going to continue to build on that. There's a big drill program going into Lucky Shot. Johnson Tract is moving forward through permitting. Manh Choh continues to produce and spit out big cash flow that's going to fund all of this development. But, we'll be looking for other accretive opportunities.
Okay.
And, more production, more cash flow is of interest. And then, once we continue to grow that bottom line, looking for the next great development project, and projects that are, I have worked with a group for the last 3 years that have successfully purchased 3 distressed assets, 3 distressed deposits that include mills, many more distressed assets. But, we've got a great group in the office that includes about 75 professionals, 40 of which are mining engineers, a dozen geologists. And so that team is aware and is monitoring a number of different projects. And now we'll have the currency, the cash flow, and the treasury to be able to take advantage of some of those opportunities for our shareholders. But I also want to say the thing I'm most proud about is the type of deals we're doing, right? And the types of deals we're doing are creative. You've had in this studio, Selkirk Copper Mines, Nations Royalty, building companies that are not only just benefiting shareholders and investors, but are also making profound impacts to communities, both financially, but also like Jay, you need to get up and have purpose in your day, right? And for a lot of these communities, wealth isn't the problem. You look at the Nisga'a, they're a very prosperous group. They've got large assets under management, a very, very large real estate portfolio, a number of businesses that are cash flowing. But for their youth, having the ability to run a public company, be on a board, really participate in a market that you and I can participate in is more important than any wealth.
That's the mission behind a couple of the other Fiore Group portfolio companies. You mentioned Nations Royalty, Nisga'a owned, right?
Yeah.
Selkirk Copper, very similar, right? That's the, it's the business, but it's also the, the opportunities, the future opportunities it's providing the next generation, right?
But that reputation that we're building through doing that work is, and again, Dolly Varden, we're on the traditional territories of the Nisga'a. The reason Nations was started was through, the relationships between Rob McLeod, who's the director of Dolly Varden and a technical advisor. And these are long relationships that go back decades. But no, so, it's one thing to, identify the fact that silver and gold are very, very topical because, there's a lack of confidence in the system. And in the case of silver, industry is buying more of it, but, and there's a great investment play there, but can we do more? Can we be thoughtful? And you have to be, right? And it's not new. Like when I first started in this industry, the first company I went to work for, 55% of our workforce at the mine was indigenous.
Right.
So these aren't new concepts.
Right.
If you're going to go in and you're going to extract wealth from a project, the local community has to participate. And if you take that approach, more groups all over the world are reaching out, from Mexico to Colombia to Argentina. They like this philosophy. They want to participate, and they want to work with groups who are creative, innovative, and realize that you got to create win-win scenarios.
Yeah, and forward thinking. I mean, it strikes me as like the inevitable maturation of our industry. And it hasn't always been like that. I've been in the business for 13, 14 years, and I can say, like, I've heard many conversations from junior mining company operators who would talk about the local community almost as opposition, right? And with that mindset, there's inevitable challenges that you just keep running into, and projects don't move forward as a consequence of that lack of cooperation, right? And lack of alignment.
Yeah.
And our industry had to grow up and mature and evolve, and the next generation's doing that, right? And there's a couple awesome examples.
But there's so much we can learn if we approach these things with an open mind. Like, we often think linearly. Phil Baker, who I mentioned a minute ago, he's putting on he's chairing a talk called The Life Cycle of Mining. And the talk's going to start with closure, right? It's not going to start with discovery.
Okay. And
by starting at closure, if you start at the end and you reverse engineer the whole process, sometimes you don't even begin. And so my point here is there's so much we can learn. Bob Quartermain, I mentioned Silver Standard earlier.
Yeah.
His philosophy was, who better to help me develop this project than the locals who know what valley to cross, what time of year to attempt to make that, where to put the power line. And so, I don't know, I think that there's so much more we can gain if we listen to community, if we listen to concerns, and we invest and harbor in their local knowledge.
Okay. Yeah. So I want to recap the company story just a little bit, and maybe, with Dolly Varden asset, the Kitsault Valley, we can expect a new mineral resource estimate in, you said March, April, thereabouts. Yeah. And we could expect something to change materially, because I think you guys have drilled like 50,000 meters over the last 12 months. A ton of work's been done. That's not reflected in the current estimate. So that's a major near-term news catalyst that we can look forward to. And now earnings, which is awesome, right? This new company is generating a significant amount of cash and production. 2 near-term producing assets, 1 near-term producing asset, and a second with lots of expansion potential. You're going to move these projects forward. You're also going to keep your eyes open for what's next. And you're a creative guy. I imagine any good idea is going to get some airtime. But how disciplined do you think you guys will be in maintaining, high grade probably goes without saying, but jurisdiction as well, high grade North America. Right now, it is just you and Hecla Mining, right? That's it, who ticks both of those boxes, which I think matter more in today's environment than ever before. Will that be the filter when you're looking at deals, or will you look at anything and then make the call?
So I think about competitive advantage. Like, we have a competitive advantage in the North. Okay. I think about diversification. Diversification's a great thing. However, my shareholders can diversify themselves in other investments if they want to take on country risk. Yeah. So for me, what I want to do is I just want to leverage on our competitive advantage, which is the North, and stick with the high grade. Good. It's going to, lower permitting time. So we're going to be extremely disciplined. And again, it goes back to investors can diversify for themselves. I don't need to do that for them. Yeah.
What can you be the best in the world at? Yeah. Right. That's a better question to ask yourself. I love that, man. I love that. What's your take on the silver sector, gold sector right now? It strikes me as funny. I've had so many conversations with metal investors over the last few months. We had a couple really hot months, and this is on the heels of some very, very tough years. And I spoke to so many gold and silver investors, Shawn, that at the first glimpse of a mainstream finance pundit leaning in and talking about gold, they would get cagey and say, we must be close to the top because we're getting interest from whatever, mainstream journalist. And I thought that is like a symptom of the PTSD that gold and silver investors have from the last 15 years. They forgot what a good market is supposed to feel like. You're not supposed to feel like the enemy anymore, right? And, it's been so long since it's been a good market. It makes sense to me. How are you rating the market right now? I know you're an investor as well as a company operator. So are you looking for opportunities? Like, are you harvesting? What are you doing?
So if I think back to 2010 and I think back to one of the best mining finance markets we've seen in probably 100 years, this market is nowhere near where we were. From a lot of metrics, and some things to look at is, the silver to gold ratio is a great indicator of where we are. And right now, silver is like 1.3% the value of gold, right? And historically, it's been anywhere from 2 to 4%, and at a market top, like 6 to 8%. So at 1.3%, we're still in a depressed market. And, these gold companies now are spitting out so much cash, right? And they're in such a healthy place. And what's happening, like I was just on the road for 11 days. I started in the UK. I went up to Zurich, down to Geneva. And when I was in Zurich, and I probably met 110 new faces on that 11-day trip. And of those 110 new faces, I met a lot of new investors that are transitioning from energy into silver and gold. And there's a lot of new funds that are being populated in places like Zug, Switzerland, where they're going, look, we want to get exposure. So I saw the last market, from 2000 to 2011, and I saw the generalists come in 2009. We went through the GFC, we had the QE come, and on the back of QE, generalists are like, okay, we need to get some metal exposure, right? There's a big print here, there's inflation. And the difference that time, the reason I don't think it was sustainable was that print just shored up the financial system that was collapsing.
Okay.
Money, like the velocity of money didn't pick up. That money didn't go out to you or me.
Yeah.
It just was shoring up a broken system.
Yeah.
So gold revaled, but this time is different. And I'll tell you why I think this time is different. This time is different because we're starting to see initiatives like Trump is talking about getting $2,000, the tariff redistribution, putting $2,000, not into every family's hand, but every American's hand. Think about times in history when George Bush put a few $100s into the hands of the average American, or during the COVID, when those COVID checks started going out, what that did to the stock market, what that did to inflation, what that did to housing. We already know what the game plan is, what the reaction is going to be. We already know policy. Policy is inflate out of this. Mm-hmm. So we're going to have another boom, another bubble, another move. And in that move, I suspect gold going to 6, 8, 10,000 and beyond. Triple digit silver, I think, is around the corner. Now, look, maybe on this run, we're going to get exhausted at like 66, 75, somewhere in that range. I look at a lot of historic metrics to give me those numbers. But the bottom line is how I'm looking at all this is we've had a phenomenal year, right? We've had a huge year. We've had a breakout year. And, but I do think whether we continue to move higher and we go up to a blow off top, which I don't think is happening. I think, you're just going to have a nice controlled move here. And that's why, so where am I? I am fully invested. Mm-hmm. I'm fully exposed. And the reason for that is all the reasons that made me come back to gold and silver, because I left in 2011. I came back to gold in 2014. I came back to silver in 2018. All the reasons that brought me back have not been solved. Right. Rick Rule talks about this, right? Yeah. Have they solved the deficits? No. Right? So until there's a solution, and the solution that I see is inflation, right? And now there's some interesting things that are being talked about, like no capital gains on treasuries, on the money you make on treasuries. Now that would be a bit of a game changer, and that might put a little water on the gold party for a minute.
For sure.
For a minute.
Yeah.
So there could be some things like the CME going down for 10 hours. You could cool the party for a minute, but ultimately the fundamentals are going to take us higher.
Yeah, that's a great point. There's going to be tactics, but that's not a strategy, right? No. That's a short-term incentive to make the treasury market more appealing, to finance the deficit, but it doesn't actually fix anything. It's the kind of definitive Band-Aid. And what you said about the sort of methodical rollout of this gold bull market, it struck me as like remarkably patient, like often the backside of a market will reflect the front side. And this market has been a slow trickle of capital from 2022 into the hard assets by central banks. And a year later, the best in class miners began to catch a bit of a bid. And a year later, the mid tiers, but it's been very slow and patient. And maybe the last year has felt a bit hot, but that's just relative to the previous 12 years. But it's been a very intelligent and logical trickle of capital from the most stable and boring assets to the less so. And that gives me a lot of confidence in the longevity because it hasn't been too exciting, I think. Let me ask you, when you say you're fully invested, you're fully allocated, or you're fully exposed, I think is what you said. What does that look like? Can I ask you from like a silver gold standpoint? What is the Shawn Khunkhun silver gold ratio look like? So
listen, after 22 years, I have the luxury of having some diversification, right? Like, having things that are outside of my precious metals portfolio, getting exposed to other hard assets, having some cash on the sidelines in case you get a deflationary event. But in terms of the nominal value of my precious metals portfolio, it's never been higher. And if I were to break it down, and I don't have this to the exact percentage, I was overweight silver. I was, 50, 60% silver in that
and
commodity
this is independent
portfolio.
Of Dolly Varden.
Yes.
Yeah. Okay.
Yes.
Yeah,
yes.
Good.
Yeah. I don't look at Dolly. For me, Dolly is a special thing. It's not something I learned this from Keith Neumeyer. You don't get up on stage for your company and sell stock. I am not going to monetize this bull market through Dolly. Dolly is a company building exercise. It's a totally separate thing. If wealth is created for me, that's a byproduct, right? That's not the mission, right? It's separate. If I want to speculate, I'll go and speculate in other names. My Dolly is for, wealth building. So for me and my shareholders. And so when I look at that portfolio outside of Dolly, it was 50, 60, 70% silver a couple of years ago. It's probably today, if I had to guess, there's probably now like a 20 or 30% copper weighting in that commodity complex.
Okay.
And I think I'm early. Yeah. But you've got to be early. And I've started to be rewarded with some of the names that I own. So there's about a 20 to 30% copper weighting. And then the balance, 70% in the precious metals. It's probably a 50-50 split between silver and gold. And, where I'm underweight is things like uranium, because they're elusive and they're hard to get. But, always on the look for an opportunity in that space. And, listening to serially successful investors, it sounds like getting into energy, oil and gas, may be something I need to shift my mind to at this moment. But right now for me, I'm 70% precious, 30% copper. Within that copper basket, I'm also going to throw in, I've got some big iron ore exposure. Yeah. Which is kind of being a bit of a contrarian, considering some projects that are coming online. But I think you've got to buy these things when they're hated. Again, I keep quoting Rick Rule.
Yeah. Well, I mean, he's actually one other. You mentioned oil and gas, and it's crazy because that has come up in conversations over the last month more times than I can count. And Rick is another one who has allocated a lot of cash, and he's gone to the sort of the biggest names in the industry. Bill Bonner, another. But there's a lot of big faces turning that direction right now to what is sort of a hated industry.
And if you think about it through the lens of like, gold to oil, ratio, right? Like if you took some of your gold chips and you put them in the oil basket, historically, your purchasing power with your gold buys you a lot of barrels of oil today.
Okay. Nickel. Are you looking at nickel? I mean, talk about a hated commodity. It's the only chart that's the exact opposite.
I have a nickel holding.
Yeah. All right. Yeah. Well, it's an interesting story, right? It's this like Indonesian oversupply, which may or may not be sustainable. Like, can this be maintained? I think most people are not up to speed on what a crazy environmental disaster the South Sulawesi Islands has become. Like, this is maybe the worst environmental disaster of my lifetime that nobody's talking about. But as a consequence of rushing these projects forward and flooding the market with dirtier nickel, they've crushed the price and put a lot of challenges in front of Canadian and Australian miners. But it's a favorable looking chart if your time horizon is long enough, because I think that will revert to the mean eventually. It's just hard to say when.
Yeah. And the way I like to look at the mining sector is taking the commodity outside of it for a moment. Like, you've got to make that thematic call, right? But like, I've always focused on like high grade opportunities because, grade works in all environments, and grade will, so whether you're producing, silver or widgets, if you've got a good business, it's a good business in all price environments. And just getting back to iron ore, like if you look at the big miners, like the really big miners, 70% of their profit center is from iron ore. So that's really the backbone.
Like the BHPs.
Of the mining sector. That is the profit center. And so just because it's, maybe not as sexy as like antimony, it doesn't mean that it's not where the real profit that is used to reinvest. And that's where, again, like, for me, I'm pretty boring. I'm pretty plain vanilla, gold, silver, when I'm feeling exotic, copper.
Okay.
Or that's sort of the staples of my diet. Yeah. And I think I'm really early on the copper.
Yeah, it's refreshing to hear that. I'm less diversified in my portfolio than a lot of people think when I walk through what I'm invested in, and it's sort of comparable, but my rationale is effectively back to what you were just talking about with Contango Silver and Gold. You want to be where you can be the absolute best in the world. Right? Don't spread yourself too thin, diversify too much. And I think about my portfolio that same way. Like, can I be a tungsten, antimony, and a molybdenum expert and gold, silver, copper? Like, I don't know if I can do that. Right?
And like, I've become passionate about the mining industry, but really what drove me in those early years was this realization about a broken monetary system. So for me, when it comes to gold and silver, you need to mine them. Yeah, they're quasi commodities, but really they're money. And so regardless of what's happening, inflation, deflation, these things have been around for 5,000 years. And there's a money aspect. There's a wealth preservation aspect. And so it's different than commodities. So regardless of, are we in a recession? Are we in a boom? These hold their value, and that's why they're such a, overweight part of my portfolio. And I feel like I could be here and if all I do is become a silver and gold expert in Canada and the US, it's all I need to focus on.
Well, look, man, I was looking forward to catching up with you at the end of this year because Dolly Varden has had a crazy year, right? Lots going on. Acquisitions, uplisting to the NYSE. You put a ton of dough away in the treasury. So I was looking forward to catching up with you to recap the year. And then I saw this news and it was like, my gosh. So this is the cherry on top. It's an amazing merger, Shawn. And you must feel really proud. I want to congratulate you on, the last 5 years. And I feel like you're just getting started. You've got a lot of new resources at your disposal now with this merger, right? The new team, new capital, new assets. I'm excited to see what you do with it, right? I think this is the beginning of the story still, which is incredibly exciting, given that the first time we sat down here, it was a $20 million market cap company and today over $1 billion.
Yeah, and I'm excited to learn from Rick And I think that's going to really, bring in a new aspect and element to my career and my personal development, business development. Again, everything that's ever happened to me, it's because I've worked with great, whether they're scientists, great financiers. And so, it's the people part of this transaction to me that's as important as the cash flow or the asset base. Because again, mining is an industry where you've got a depleting resource. So how you move to replenish that resource is as important as how you expand, extend, develop, and operate that resource.
100%. You're always on the treadmill to a degree.
Good thing I'm a runner.
Yeah. Well, look, Shawn, I appreciate your time today. Thank you for coming in. Excited to chat with you more at the Vancouver Resource Investment Conference next month.
I'm really looking forward to that.
Love to get you and Rick on stage. You mentioned Bob Quartermain today. He'll be there. Love to get you guys on stage. There's so much that we're going to talk about at that event. I'm looking forward to it. But most of all, thanks for coming in today. Congratulations again on the creation of this new company and the future that you're looking forward to.
Thank you.